Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets behind those massive corporate filings. Today, we're diving deep into NAPCO Security Technologies, Inc.'s latest filings, and let's just say their annual shareholder meeting notice is packed with more than just meeting times. It's a treasure trove of information. But we're going to sift through the legal jargon to find the real story, especially in their financial numbers, so you don't have to. Before we get started, if you like getting straight, no-nonsense explanations of what these corporate documents actually mean for the companies you might be invested in, make sure you are subscribed. And hey, we've got a fantastic community over on our Discord server, linked in the description below, where we break down these filings even further. So dive in after the video. This document is essentially a heads up to shareholders about an upcoming annual meeting, the 8th of December 2025 to be exact. It's where important decisions get made, like electing directors and giving the thumbs up to their auditors. But what's really interesting is how they're providing the meeting materials. They're going all digital, sending out a notice that tells you where to find everything online instead of mailing paper copies. Smart saves trees and probably some cash. Let's talk about the people in charge. The first big item on the agenda is the election of directors. The company is looking to re-elect 3 individuals for a 3-year term: Richard L. Soloway, Kevin S. Buchel, and David Patterson. Soloway is the chairman, CEO, and secretary, a real cornerstone of the company, having been involved since the 1970s. Buchel is the president and chief operating officer, also with a long history at NAPCO. Patterson, a former governor of New York, brings a different kind of experience, currently serving on both the nominating and compensating committees. It's pretty standard stuff, but it highlights who holds the power steering for NAPCO. The way they structure board elections is interesting too. They divide the board into 3 classes, and only one class stands for election each year. This means that a majority of the board is always continuing, which can provide stability, but also potentially make it harder for new perspectives to get a foothold quickly if that's what shareholders wanted. It's a classic corporate governance structure designed to ensure continuity. Now, what really gets my attention in these filings are the numbers, the actual performance of the company. Let's jump into the financial heart of this report. This table is often a big eye-opener. It details how much the top dogs at NAPCO are paid. For fiscal year 2025, we see Richard L. Soloway, the chairman and CEO, earned a total compensation of over $1.7 million. That's a hefty sum, and it includes his salary, bonus, and other compensation. Kevin S. Buchel, the president and Kushu, pulled in over $889,000. Michael Carrieri, Executive Vice President of Engineering and Chief Technology Officer, earned over $720,000. Steven Spinelli, Senior Vice President of Sales, brought home over $327,000. And Andrew J. Vuono, the Chief Financial Officer, earned over $508,000. It's always important to see how these numbers compare to previous years and to the company's overall performance. Let's look at the trend for the CEO specifically. In 2023, Mr. Soloway's total compensation was around $1.3 million. By 2025, it had grown to over $1.7 million. That is a pretty significant increase in just 2 years. Meanwhile, other executives like Kevin Buchel saw their compensation fluctuate more dramatically. In 2024, his compensation was almost $2 million, then dropped to around $889,000 in 2025. This kind of swing in executive pay can be influenced by many factors, like bonuses tied to company performance or the timing of stock option grants. Then we have the stock options. This is a significant part of executive compensation designed to align their interests with shareholders. We see various outstanding option awards for multiple executives. For instance, Richard L. Soloway has options for 10,000 shares with an exercise price of $26.94 and 80,000 with an exercise price of $22.50. Kevin S. Buchel also holds significant options. These awards vest over time, meaning executives have to stay with the company to fully benefit from them. The exercise prices and expiration dates are critical details for anyone looking at the potential dilution or the value these could represent. Now, for a bit of drama, the golden parachute compensation table shows what executives would receive if there was a change in control of the company. For Richard Soloway, in the event of a change in control and a specific type of termination, the potential payout is a whopping $5.2 million. Kevin Buchel could receive over $633,000, and Michael Carrieri over $434,000. These provisions are designed to provide financial security to top executives during uncertain times like a merger or acquisition, but they can also be seen as a significant cost to the company and its shareholders if triggered. Let's talk about the gap between the boss and the average worker. This CEO to median employee pay ratio is a disclosure requirement that often raises eyebrows. For NAPCO, the 2025 annual total compensation for their CEO was about $1.7 million. The median compensated employee earned just $5,300. This results in a pay ratio of 327 to 1. The report notes that 72% of their employees are in the Dominican Republic, where compensation is typically much lower. This statistic is a stark reminder of the vast income disparities, and it's crucial to understand the context, especially when a large portion of the workforce is located in a lower cost region. This section is where we try to connect the dots between what executives are paid and how the company is actually performing. We see the CEO's compensation and the average compensation for other top executives over the last few years, alongside metrics like net income, net revenues, and adjusted EBITDA. For instance, in 2025, the CEO's total compensation was about $1.7 million, while compensation actually paid was around $1.5 million. For the non-CEO executives, the average compensation was much lower. When you look at net income for 2025, it was over $43 million. Comparing these figures over time shows whether pay is truly tracking company performance, or if it's just going up regardless. For example, in 2024, the CEO's compensation actually paid was significantly higher than his reported summary compensation, indicating large adjustments likely due to stock awards. This table shows who actually owns the company's stock. Richard L. Soloway, the CEO, owns about 1.5 million shares, representing 4.23% of the company. Then we have institutional investors like the Vanguard Group, Inc., with 8%, and BlackRock Institutional Trust Company, NA, with 7.07%. This gives you a good overview of the major stakeholders. It's important to see if insiders like the CEO are significantly invested, as that can be a good sign of confidence in the company's future. Finally, we have the auditors, Deloitte and Touch LLP. They've been the company's auditors since fiscal 2024. Stockholders get to vote on whether to keep them. This is a routine but important step to ensure the company's financial records are being checked by an independent party. The fees they charge are listed. And for fiscal 2025, audit fees alone were over $835,000. This is the price of trust and transparency in the financial world. So, what's the takeaway from all of this for NAPCO Security Technologies, Inc.? The company seems to be on a stable path with experienced leadership and a clear plan for board renewal. The executive compensation, while high, is somewhat tied to performance, especially when you consider stock options. However, the significant difference in pay between the CEO and the median employee, primarily driven by their international workforce, is a point to note for anyone thinking about social responsibility. The company's financial results, as indicated in the pay for performance section, show a strong correlation between net income, net revenue, and EBITDA with executive pay, which is generally a positive sign for shareholders. Their consistent revenue and adjusted EBITDA growth over the years suggests a solid business model. The golden parachute provisions are quite substantial, indicating a commitment to retaining key executives even in the event of a takeover. But they also represent a potential significant cost. The large institutional ownership by Vanguard and BlackRock suggests that these major investors have confidence in the company's long-term prospects. Overall, NAPCO appears to have a well-established business with experienced leadership, though the significant pay disparity and substantial golden parachute packages are worth considering. Alright, that is our breakdown of NAPCO Security Technologies Inc. Its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.